Hello everyone. This is the pre-market report video for today, 13th July 2023 in the Indian stock market in terms of Nifty and Bank Nifty. I know everyone eagerly wants to know about US inflation and its impact on US stock market, but I really think it's important to know clearly first what happened in the Indian market. Especially yesterday, since there are different theories floating around why the last 30 minutes dropped. So without delay, let's start. Nifty opened a gap up of near 60 points, but within 10 minutes it lost all its 60 points opening gain. Basically, throughout yesterday it was like that only. Having the 19,450 in the middle, Nifty just moves up and down until the last 30 to 35 minutes, where Nifty dropped almost 80 points in the downside and it closed below 19,400. Now the question is how, why and what caused it? Here, one theory is it was due to the HDFC and HDFC Bank merger related rebalancing. So first, let's look at those. If you see the gross purchase and gross sales figure of both FII and DII, indeed their trade value is almost double than that of the regular day, which means definitely it's a rebalancing of funds. In addition, if you see the HDFC Bank's chart, and it too showed that in the last 30 minutes it dropped over 1%. So it's clear that the merger related rebalancing did affect the Nifty in the negative side. However, in addition, profit booking on IT stocks too did added fuel to Nifty's downside. If required, please pause and have a look. Yellow is the Nifty's curve and blue is the Nifty IT. As you see, Nifty IT did drop more than 0.8%, which in turn drags the Nifty by 0.3%. Basically, IT stocks profit booking before the key results and the index rebalancing due to the HDFC Bank merger together drags the index down. Here, I'm sure and I watched all the global market for their impact in Indian stock. There was nothing. All other global market major index all were trading really positive. It's just Indian market odd man out. Again, because of this rebalancing, data showing that FII net sold for 1,240 crore rupees. But honestly, we should not consider this data since it's not the representative of the regular day-to-day trading. It's just the major index that got affected yesterday, not the overall market. Both mid-cap and small-cap increased by 0.5% each. In case of advanced decline ratio, it was 1, which means equal number of stocks were advanced with respect to declined ones. Anyway, other than Indian market, after our market close, all European market was crazy positive. For example, UK's FTSE increased over 1.8%. In Nifty terms, it's equivalent of 355 points increase in one single day. Regarding US, before their market opening, US Bureau of Labor Statistics released the consumer inflation data for June month. I hope you guys remember the last Monday pre-market video. In that, US market turned and closed positive because of two entities forecasted that the June month inflation will be lower. At that time, New York Fed forecasted that it to be around 3.8% and economists in Reuters forecasted it to be 3.1%. And I did remember we discussed both of the value was unbelievably good compared to May month's 4%. Now, yesterday, last night, it came even less than that. It just only 3%. In comparison, last 2021 June month, it was over 9%, which was the one that created all this inflation panic in all around the world. Now, from that 9%, it dropped to just 3%. Only 1% away from the Fed 2% target, lowest value since March 2021. So again, this is unbelievably good inflation number for US market. The core inflation is still higher, so the most of the drop comes from the lower fuel price. But those are the different story for different day. Now let's cheer for this good number. Because of this low inflation number, now the CME Fed Watch tool predicting, of course, there will be a 0.25% rate hike in the upcoming FOMC meeting. But on the positive side, it's showing that will be the last rate hike this year, which in turn pushed the Treasury bond yield and dollar index down. Thus, all three US major index closed positive. Here, the positivity was somewhat capped in the Dow Jones second half. Since today, before the US market opening, Pepsi and Delta Airlines are going to release their earnings and both of them were index stock which closed over 1% negative. Anyway, in the end, Dow Jones increased by 0.25%, S&P 500 increased 0.74%, whereas Nasdaq rallied 1.15%. In case of VIX, it dropped 9% and moved near 13.5. Coming to Indian ADR, ICICI Bank and Wipro closed positive, whereas HDFC Bank and Infosys closed negative. Here we know the issue around the HDFC Bank. Then about Infosys, there was a report that released yesterday. Infosys postponed this year's salary hike for their employees who are below the senior level management. This raised the concerns among the investors. First, this will increase the attrition rate. Second, management will do this only if there is a severe contraction in the profit margin. Either of the scenario is really bad, and this is what made the Infosys to close negative of 1%. However, GIFT Nifty at 3 AM Indian Standard Time, it closed at 19,565, equating that to the spot market, indicating the gap up of 100 to 130 points. Here, I want to clarify one thing. Some of the friends in the comment section asked why I snapshot the SGX Nifty and not the GIFT Nifty. The answer is the value whatever I am showing belongs to GIFT Nifty. However, that website is still releasing under the SGX Nifty name. In the GIFT Nifty section, they are releasing some random number. I cannot able to find where they are taking it from. Anyway, the point is the snapshot is the correct GIFT Nifty value, but it was under SGX Nifty name. So this is what happened yesterday in the global market. Now let's move to the Indian market related info. First, about the TCS quarterly results. In short, overall it beats the analyst estimate. I mean, quarter on quarter, their profit declined just 2.8%, whereas analysts expected it to drop over 4.6%. So their profit reduced less than what analysts expected. However, they expected the revenue to increase 0.5% quarter to quarter, but it increased by just 0.4%, so marginally lower. In case of EBIT margin, it was in line with the expectations. Overall, it's good. However, last week, some analysts expected some shares buyback. Yesterday, as far as I know, there was no announcement about that. So, that's the story of TCS. Whereas, in case of HCL, their EBIT margin guidance was 18 to 19%. However, their results came as just 16%, which is not good, since in comparison, TCS EBIT margin was over 23%. However, their revenue guidance was in line with the market expectations. So basically, it's the profit that got affected. HCL attrition rate dropped significantly, which was very positive. Anyway, let's see how market will react today to both the results. Finally, yesterday, it's not just US government that released their inflation number. It's Indian government also released their India's inflation number. I mean, Ministry of Statistics released the June month's India's consumer inflation. The data came as 4.81%, which is slightly above than the expectation. But on the positive side, it's still below the RBI's target level 6%. As a summary, US market closed positive, GIFT Nifty indicating the gap up of over 100 points. But the only negative at present is the negativity around Infosys and how market interpreting the TCS and HCL results. Here, I came across interesting stat in some random website called Benzinga, and as per them, at present in US market, Infosys ADR, it got the short position of near 6 crore Infosys shares. They also mentioned that for traders, they will take at least 5 whole days to cover all those shorts. According to me, it looks like some oversold conditions, so please be cautious while trading in Infosys. Then about the things to look out, Wipro, Federal Bank, Aditya Birla Money, Tata Metallics and Angel One are some of the major Indian companies' earnings results are scheduled to release today. And in terms of macro, first, before our market hours, it's Chinese trade data. Then during our market hours at 11:30 AM, UK's GDP data. Then in the afternoon, France CPI data is due. Finally, in the night, usual US weekly jobless claims data and PPI producer inflation data for June month is scheduled to release. Coming to technical, as we discussed, yesterday Nifty opened a gap up, but throughout yesterday, having 19,450 in the center, there was a tug of war between buyers and sellers. However, in the last 30 minutes push down, made the Nifty to form long bearish red candle with short upper and lower shadow. And by combining the last 2 days, it forms the bearish engulfing pattern. However, as I said, yesterday Nifty's last 30 minutes trade was more of the one of the event, so it's not the representative. So if we take the last 30 minutes out, then it forms the short red candle with short upper and lower shadow, which is kind of indicating the equal strength among the buyers and sellers. Anyway, still in the last 7 days, Nifty was in the range bound 19,300 to 19,550. So either side breakout will dictate the trend. This is what exactly happened when Nifty stuck in early June between 18,500 to 18,800. Overall, the trend is positive and Nifty is undergoing time-wise correction. Crucial support zone stands at 19,380 to 19,300. In case of Bank Nifty, it broke the support 44,800, which in turn indicates the negative sentiment. But as far as I believe, it requires additional confirmation today. Let's see. Again, like Nifty, it too stuck between 44,500 to 45,200. Now, HDFC Bank and HDFC merger is completed. Let's hope for the positive breakout. Here, I think the positive breakout will only happen after all the settlement related to HDFC and HDFC Bank merger. Moving on, based on change in open interest, there are some put options unwound between 19,400 to 19,300 and the maximum call option open interest is at 19,600. So, as per open interest analysis, 19,600 is the resistance. Then, based on overall options open interest data, 19,300 got the nearby maximum put options without significant call option. So, as per this, 19,300 is the support we need to look out for. Coming to Bank Nifty, based on overall options open interest data, 45,000 got the huge short straddle and with a maximum nearby call options. So, 45,000 is the resistance to break. Then the maximum put option with call option is at 44,000. Thus, 44,000 is the support. So, that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video. So, it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I am doing this for my and viewers' educational purpose only. Thanks for watching.